welcome back. Here is our next case study from CA Final, Paper 3, Audit MCQs and Case-Based Scenarios, booklet of ICI. Okay, let's go through the case study. Papa Limited is a listed nationalized bank whose face value per share is 100 each, having its operation across India. Papa Limited appointed Mr. Das, Mr. Pass, Mr. Tas as its central joint auditors for the year 2021. After making sure that all of them are qualified to be appointed as statutory auditor of the bank, Papa Limited issued appointment letter as well as the engagement letter to all of them. The engagement letter contains the details on objective and scope of audit, responsibilities of auditor, management and identification of framework applicable. It also contains the reference to expected form and content of report that all three joint auditors from all the three joint auditors. During the year, Papa Limited has acquired another bank called Baby Limited. While finalizing the books of accounts, some adjustments were made to give the effect of merger. These adjustments were related to determination of goodwill of 2 crores, determination of amount of minority interest of 50 lakhs, and some intra-group transaction adjustment of 15 lakhs were also made. Another adjustment which was made was harmonization of accounting policies of both Papa Limited and Baby Limited, which was rupees 30 lakhs. So till here what you have identified is P Limited has acquired B Limited, right? In this, what are the permanent consolidation adjustments and what are the current consolidation adjustments? This need to be identified. Current consolidation adjustments relate to the current year adjustments only, and permanent consolidation adjustments relates to the minority adjustments and the goodwill. Therefore, in this question, the permanent consolidation adjustment amounting to 2 crore plus 50 lakhs, it is 250 lakhs, okay? And the current period adjustments are 15 lakhs plus 30 lakhs, which is 45 lakhs. Hope you are clear with this point. This will be useful while we are going through our MCQs. Okay. While planning the audit, all joint auditors mutually decided that responsibility of verification of cash book will be entrusted with Mr. Pass. But Mr. Pass failed to detect a fraud committed by the cashier, which he could have detected if he had properly checked the cash book. This fraud was revealed in the special audit which was conducted on the directions of RBI. Responsibility for verifying compliance with SLR requirement was entrusted with Mr. Das. While performing audit on compliance with SLR requirements, Mr. Das used 12 odd dates in different months of fiscal year. Mr. Das, with his professional judgment, used the below mentioned dates. Okay, month, day of the month, and the day, which weekday has been given to us. Okay. Okay, let's discuss this while doing this MCQs only. Mr. Das was entrusted with responsibility of calculation of demand and time liability. On 31st March, total liability stood at 200 crores. It includes margin held for funded facilities of 3 crores, credit balance for one branch of 4 crores, adverse balance of Nostro mirror account of 2 crores, and unadjusted deposit for agency business of 6 crores. Papa Limited has total 12 directors, including 3 women directors. Out of them, Mr. Wright was non-executive chairman as well as promoter of the bank. Papa Limited has a total of 5 independent directors in their board. Wife of CA Das, who was also a chartered accountant and was actively involved in purchase and sale of shares. She purchased 100 shares of Papa Limited of 100 each for 15 lakhs. All the required communication were made among the joint auditors and significant matters were discussed with those charged with governance. At the end, an unmodified report is in accordance with SA 700 was issued, which was signed by all 3 joint auditors. Okay. Based on the above facts, answer the following. Question number 14.1. Which of the following statement is true as per the given situation? See, while having a look at the options, you identified that this question is speaking about the adjustments, consolidation adjustments, which are permanent and the current. Okay. But we have identified these two adjustments while going through the case study itself. What we identified is 250 lakhs is relating to permanent consolidation adjustments, which comprises of 2 crores and 50 lakhs. And the current period consolidation adjustment is 45 lakhs, which comprises of 15 lakhs and 30 lakhs. Hope you are clear with this, and therefore option A is the correct option, right? We'll go through other options. We have already identified this 250 and 45 in the case study. So other options straightforward, we can say these are not correct options because our figures of 250 and 45 are not reflecting in other options. Okay. The next question, 14.2, while verifying the compliance of corporate governance in accordance with regulation 17 and 17A, was there any non-compliance in composition of board? Let me just quickly go through this 17 and 17A regulations, okay? See, verification regarding composition of board, regulation 17 and 17A. The auditor should ascertain whether throughout the reporting period, the board of directors comprises an optimum combination of executive and non-executive directors with at least one woman director, and not less than 50% of board of directors comprises non-executive directors. It may be noted that the board of directors of the top 1000 listed entities shall have at least one independent woman director. So what we have identified is, out of the total composition of board of directors, at least 50% has to be non-executive directors. So let's go through the case study. The case study says, see here, Papa Limited has total of 12 directors, including 3 women directors. Papa Limited has a total of 5 independent directors in their board. Total number of directors is 12. 12 into 50% is 6 independent directors. It should maintain at least 6 independent directors. But the total number of independent directors are 5 in Papa Limited. Therefore, there is a non-compliance with regard to regulation 17 and 17A. Hope you are clear with this point. Now we'll identify the correct option. Is there any non-compliance? Yes, there is a non-compliance. So we have to go through only option B and option D. Okay. Option B says, yes, as in this scenario, there should be at least half, that is 6 independent directors. Yes, this is what we have identified with regard to the regulation, right? So option B is the correct option. But still, we'll go through the other option. Option D says, yes, in this scenario, there should be at least 2/3. That is 8 independent directors. Is that so? No. The regulation says it should be 50%, right? Therefore, option B is the correct option. Let's go through the next part. Question number 14.3. List down all the months whose dates have been selected inappropriately by CA Das for calculation of SLR compliance. I don't know how many of you have gone through this part previously. Let me just take this up. See, statutory liquidity ratio, SLR requirement. Please go through the third line from the last. The Reserve Bank of India requires statutory central auditors of banks to verify the compliance with SLR requirements of 12 odd dates in different months of a fiscal year, not being Fridays. So, RBI is asking the auditor to check the SLR requirement on odd days. That's fine, but such odd day should not be a Friday. So, hope you have identified this. It is starting from the third line ending part of this SLR. It says the Reserve Bank of India requires statutory central auditors of bank to verify the compliance with SLR requirements of 12 odd dates in different months of a fiscal year, not being Fridays. Therefore, we need to go through our case study and we should identify in which months Mr. Das has selected Fridays. See, from April, Thursday, Friday is on June, July and October, right? So, June, July and October are the wrong odd dates which were selected by CA Das for checking the compliance with SLR requirements, right? Therefore, our answer is June, July and October. We need to search this option in the given options. June, July and August. Sorry, June, July and October. It is option C. Therefore, the correct option for this question is option C. 14.3 is option C. Okay. We'll go through the next question. 14.4. While calculating SLR compliance of Papa Limited, what will be the value of demand and time liability as on 31st of March? So for this question, I want you to be very conscious at this point. I'll go through the provision and go through the question again, and then we'll solve the answer. Okay. Check out. This is with regard to the SLR compliance which was given in our study material. You can also go through this point. See, while examining the computation of DTL, that is demand and time liability, specifically examine the following items which have been excluded from liabilities. Okay. This point says which have been excluded. And the next point says similarly, this L1. Similarly, specifically examine that the following items have been included in the item liabilities. Okay. So the down ones, these points are to be included in the liabilities, and this particular 4 points which was stated in the pink, these has to be included in the liability. Okay. What we'll go through the question first. We'll identify which kind of liabilities are there. We'll come back to this page again and again, and we'll identify the correct option. Let's go through the question. See, here it is. These adjustments were relating to determination. Sorry, not this. The question is regarding this point, right? Yes. Mr. Tas was entrusted with responsibility for calculation of demand and time liabilities. On 31st of March, total liability stood at 200 crores. Please take a pen and paper and write down these points. Okay. Total liability is coming to 200 crores. It includes margin held for funded facilities of 3 crores. It is saying margin held for funded facilities of rupees 3 crores. So we'll go through that screenshot once again. We'll identify whether this need to be included or not. But the question says this 3 crores is already included in 200 crores. Okay. Check out. See, it is dealing with margins held for funded facilities, right? This pink one, which is saying while examining the computation, you need to exclude the following liabilities. Here it is saying the last point, margins held and kept in sundry deposits for funded facilities. So this margin of 3 crores has to be excluded from the 2 crores which we have identified. The 2 crores is the total liability, 200 crores is the total liability, and from which we need to reduce this 3 crores relating to margin for funding facilities. Okay. So this needs to be excluded. Now the total liabilities has come to 197 crores. 200 minus 3, 197. Okay. Let's get back to the question again. We'll continuing. Credit balance of one branch is 4 crores. It is saying credit balance of one branch is 4 crores. It is saying the branch balance. Okay, we'll go through. See, similarly, this second point, similarly, specifically examine which of the following items have to be included in the liabilities. The first one says net credit balance in branch adjustment accounts, including those relating to the foreign branches. So the particular 4 crores which have already been included in the total liabilities, that needs to be included, because this computation says it needs to be included. Hope you are clear with this point. So till now our total liabilities are coming, demand and time liabilities are coming to 197 only. Okay, we'll get back to the question again. Adverse balance of Nostro mirror account of 2 crores. Advance balance of Nostro mirror account of rupees 2 crores. We'll go back here. See, this is with regard to liabilities which has to be included in the demand and time liability computation. In this, the last point says reconciliation of nostro accounts with nostro mirror accounts needs to be scrutinized carefully to analyze and ascertain if any inward remittances are received on behalf of customers. So any reconciliation, any balance of nostro mirror accounts have to be included in our total demand and time liability computation. In the question, it has already been included, right? Therefore, we are not touching it again. With till here, our total demand and time liabilities are coming to 197 only, because we are not considering branch balance and the nostro mirror account balance. These two have already been included in the total liabilities. Okay, we'll go back to the question again. See, here it says an unadjusted deposit for agency business of 6 crores. The next adjustment is speaking about unadjusted deposit for agency business, which is amounting to 6 crores. We'll go back to the screenshot again. See, here it says, while examining computation of DTL, the following items have to be excluded from the liabilities, wherein it has said unadjusted deposits or balances lying in linked branches for agency business. In respect of shares debentures to the extent of payment made by other branches but not adjusted by the link branches. So it is saying unadjusted balances of agency businesses has to be excluded while computing DTL. So we need to exclude that 6 crores from our balance of 197. We will be arriving at 191 crores. Hope you are clear. Again, I am repeating, this 200 crores is including all these figures, balances. Okay, 3, 4, 2 and 6 are already been included in the 200 crores. But as per the computation guidelines, we need to exclude margin held for funded facilities and the unadjusted deposit for agency business to arrive at demand and time liabilities. Okay. Why we are ignoring this credit balance of one branch and adverse balance of nostro mirror account? Because this need to be included in demand and time liabilities. Okay. Therefore, our answer is getting to 200 minus 3 minus 6, which is 191 crores. Okay. Therefore, the answer to question number 14.4 is 191 crores. Option A is the correct option. Hope you are clear with this point. If you are not clear, please rewind it back, take a pen and paper, write the solution in, and then you will be identifying the correct option. I am sure you will definitely understood this particular point. Keep your study material beside, refer to the question and the points which were given. In fact, I can even give you the page number. It is 9.20 of your study material. Okay, it is 9.20 of your study material. Take this page out, keep the question aside and the study material, take a pen and paper, solve the question. You will get 191 crores. Okay, it is 200 crores minus 3 crores minus 6 crores, which is getting to 191. With this, we have completed our 14.4 question. Okay, and then we're moving forward. 14.5. Will CA Das be disqualified after his wife purchased 100 shares for 15 lakh rupees? See, she has purchased it for 15 lakhs. But what was the face value of this particular share? It is 100 rupees each. Hope you have identified while we are going through the question. See, she purchased 100 shares of Papa Limited of 100 each. So the face value of each share is 100. Therefore, she has purchased 100 shares of 100 each, which is getting to 10,000 rupees, right? Hope you are clear. 100 shares into 100, 100 into 100, 10,000. 10,000 rupees each is the value of these shares. Okay. We'll go through the options. But before going through the options, let me just take you through a point. So this is with regard to the disqualifications of auditor. Okay, you can identify here. It is with regard to the disqualification of auditor from our company audit chapter, page number 5.8, wherein it says a person who or his relative or a partner is disqualified from holding any interest in any company or subsidiary whatsoever. You already know this point, right? But the following points may be noted in this regard. The first point says the value of shares of 1 lakh can be held by relative is the face value, not the market value of the shares. Therefore, here wife of CA Das, wife means it's an immediate relation to CA Das. So she is holding face value of shares amounting to 10,000 rupees. It is not exceeding the limit of 1 lakh. Therefore, CA Das is not disqualified from being acting as an auditor of the company. Hope you are clear with this point. We'll go back to the question. Is he disqualified? No. So the first option is saying Mr. Das is disqualified. Is that so? No. Mr. Das is not disqualified. We'll go back to the we'll go through the next option. Mr. Das will not be disqualified as an auditor of Papa Limited as his relative owns shares of less than 20 lakh market value. Is that so? No. The provision is strictly speaking about the face value of shares which is amounting to 1 lakh. Therefore, option B is also wrong. We'll go through the next option. Mr. Das will not be disqualified as an auditor of Papa Limited as his relative owns shares of less than 1 lakh face value. Therefore, option C is the correct option for this question. Option D is also saying Mr. Das is disqualified. But actually, Mr. Das is not disqualified because his relative is holding shares of face value less than 1 lakh rupees. Therefore, option C is the correct option. With this, we have completed our 14th case study as well. That's all for today. Hope you have understood this entire case study. Please go through it again. You will identify few doubts also. Try to sit peacefully, resolve the issues, and even if you are unable to resolve, please comment below. I will rediscuss this that particular point. Okay, that's all for today. Hope these videos are helpful to you. If you find these videos helpful, please do like, share and subscribe. Share to your friends and help them to revise as quickly as possible. Okay, thanks for watching.